What's going on? Welcome back to the channel. So today when I talk to you about e.l.f, they just dropped their earnings. So I want to go over some of the absolute key highlights from their earnings that you kind of need to take away from an investor standpoint. And then aside from that, go over some of the tentative data and just generally some support and resistance points that you need to watch going forward. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So e.l.f did close at $88.49 after hours, dropping 25.29%. So absolute craziness today, and ultimately it's kind of throwing it back to 2023. That seems to be kind of the lowest when it was around this same price point for the most part. So yeah, kind of interesting stuff. As far as the implied move, you did have roughly 12.39%. So it was going to be a volatile earnings in general, among kind of the highest over the last little bit, but I don't think even looking here, the 1-day move, this has been the most volatile of them all. And so even the lowest that it's been looks like Q2 earnings in 2024 when it dropped 14.43%. So this one blows that out of the water. So getting right to it though, going over some data points, shorts. So obviously this isn't a squeeze play whatsoever, but it's good to analyze this type of information. Shorts did return 64,000 shares leading into the earnings. And you can kind of tell that shorts knew that it was going to be bad earnings only because they did recently increase roughly like 10.38% to where it is now at 12.83. So again, if you kind of analyze this for face value, they knew that it was going to be I don't know if they knew if it was going to be as horrific as it is, but I think they kind of knew it was going to be a miss. But again, going into tomorrow, they might play a little bit of a part potentially on what might happen. Options wise, you had 22 million in calls, 7.54 million in puts. 52% of all the options being done today were optimistic in nature, and you can kind of see just between 950 and 955 there was 3.9 million in options premiums. So if we kind of look at this and orient it, it was 3 big transactions and all of them were bullish. And it looks as though one for expiring tomorrow, $89 call, and then you also had 2 $89 calls for the following Friday. So those definitely look like they will be expiring close to worthless unless they kind of recover that yesterday or tomorrow or whatever. But as far as the call options that were purchased, you don't really see that much kind of options. It looks like around the $89, $90 range was anticipated. And then the bears, they anticipated for it to be around that $68 range. So they kind of thought it was going to get to these levels. So it's kind of interesting to see that. Based on support and resistance points, with it going down so far, honestly, the next points that you need to watch for is $69.36. That's going to be a key one for it to really fight and get above. If not, then yeah, you might be seeing it pretty much go down to like the $40 range, which would be absolutely insane. So definitely in the short term, watch for it to get to that $69 range. But during the after hours activity, let's if we kind of pull this up. So if we pull up e.l.f right here, you can kind of see it did get to that $69 range for the most part. And so most likely it'll be kind of hovering around that tomorrow, in my opinion, of course. But as far as analyst ratings, nothing new has come out yet. So probably a lot of analysts are trying to digest the recent information that was stated and come up with a good conclusion. There was some ratings that came out yesterday, and I have no idea why ever analysts give ratings prior to a company's earnings. It just does not make sense. I don't know if there's some sort of quota that they have to do or why, but it doesn't make sense whatsoever. So there was a couple that came out yesterday, 131, 153, 170, all of which look absolutely dumb right now. But Piper Sandler, Morgan Stanley, D.A. Davidson, all the ratings. So you have 43%, 62% success rating, and 35%. So 2 of them kind of make sense. They're just shooting at the hip for the most part. Low end for the ratings, 105. That was done 3 days ago. So it'll be very interesting to see in the next couple of days the types of ratings that do come out. So this is your quick summary on some of the data points. Getting to their actual earnings, I'm going to play this for you. And this goes over the absolute bare bones that you need to know, the highlights from their earnings and kind of the key takeaways. So make sure you guys hit that thumbs up. Are you a buyer? Are you a seller? What is your general thoughts on e.l.f? With that, appreciate all of you guys watching.
e.l.f. Beauty lowers Q4 sales outlook to 1% to 2% growth amid category challenges. Earnings call insights e.l.f. Beauty Q3 2025 management view. CEO 𝗪𝗓𝗓 highlighted e.l.f. Beauty's consistent growth, with Q3 marking the 24th consecutive quarter of net sales growth and market share gains. Net sales grew 31%, adjusted EBIT $69 million, and U.S. market share increased by 220 basis points. 𝗪𝗓𝗡 emphasized that e.l.f. is the only cosmetics brand to achieve such consistent growth over this period. 𝗪𝗓𝗡 addressed softer-than-expected consumption trends at the start of calendar 2025, attributing this to a declining category, high December promotions, and slower-than-expected new product launches. To balance these factors, the company reduced its Q4 net sales outlook to a range of -1% to +2%. CFO Mandy Fields reported a Q3 gross margin of 71%, up 40 basis points year over year, driven by favorable foreign exchange impacts and cost savings. Adjusted net income was $43 million, or 74 cents per diluted share, equal to the prior year. Outlook: full-year fiscal 2025 net sales growth is now expected at 27% to 28%, down from the previous guidance of 28% to 30%. The company also revised its adjusted EBITDA guidance to $289 to $293 million, down from $304 to $308 million, reflecting the updated sales outlook and a $7 million foreign currency loss. For Q4, anticipated net sales growth was lowered to -1% to +2%, with management explaining this reflects prudence amid softer consumption trends, challenging category conditions, and slower-than-expected new product performance. Fields noted that the gross margin outlook for fiscal 2025 was raised to a projected 40 basis point increase year over year, up from the prior expectation of 30 basis points. Financial results: Q3 adjusted EBITDA was $69 million, flat compared to the prior quarter, with adjusted net income also remaining consistent at $43 million. International net sales grew by 66%, contributing 20% of total Q3 sales, up from 15% a year ago. Digital consumption trends saw nearly 30% growth year over year, maintaining momentum despite a highly promotional quarter. The U.S. market saw a 16% growth in tracked channels, despite a 5% decline in the broader category. 𝗪𝗓 grew its market share by 220 basis points, driven by strong performance at retailers like Target, Walmart, and Dollar General. Q&A. Bill Chappell, Truist Securities, asked about the duration of softer trends observed in January. 𝗪𝗓𝗡 explained that the company is assuming these trends may persist for a couple of months, but noted potential improvement as promotional effects and social media disruptions stabilize. Andrea Teixeira, J.P. Morgan, inquired about U.S. consumption trends and the Q4 outlook. 𝗪𝗓𝗡 highlighted ongoing market share growth despite a challenged category, with January scanner data showing modest growth and 90 basis points of share gains. Dara Mohsenian, Morgan Stanley, sought details on adjustments to marketing and innovation strategies in light of the softer category environment. 𝗪𝗓𝗡 reiterated the focus on balancing support for core franchises and new products while maintaining current marketing investment levels. Olivia Tong, Raymond James, questioned the company's ability to capitalize on consumer trade-down behavior. Fields emphasized e.l.f.'s value proposition and plans to highlight its lower-priced items to attract cautious consumers. Sentiment analysis: analysts expressed concern over the softer consumption trends and the lowered outlook, indicating a slightly negative sentiment. Questions focused on the sustainability of growth, consumer behavior shifts, and long-term category dynamics. Management maintained a confident tone during the prepared remarks, but appeared more cautious in the Q&A. Reflecting the challenges in Q4, 𝗪𝗓𝗡's responses frequently emphasized prudence and transparency. Compared to the previous quarter, there was a clear shift toward a more cautious tone, particularly in discussing the outlook for Q4 and fiscal 2025, quarter-over-quarter comparison. In Q2, the company raised its fiscal 2025 guidance, reflecting higher confidence in international growth and pipeline shipments. In contrast, Q3 saw a reduction in guidance due to softer consumption trends and category challenges. U.S. market share growth accelerated quarter over quarter, rising from 195 basis points in Q2 to 220 basis points in Q3, despite category headwinds. Management sentiment shifted from optimistic in Q2 to cautiously optimistic in Q3, with greater emphasis on potential near-term challenges, risks, and concerns. Key challenges include declining category trends, slower than expected new product launches, and potential macroeconomic uncertainties affecting consumer spending. Management highlighted mitigation strategies, including focusing on core franchise support, leveraging international and digital growth, and maintaining investment in marketing and innovation. Analysts raised concerns about potential retailer destocking and the sustainability of market share gains in a slowing category. Final takeaway: e.l.f. Beauty delivered another strong quarter with 31% net sales growth and continued market share gains. However, the company lowered its Q4 sales outlook to -1% to +2%, citing softer consumer trends and category challenges. International and digital growth remains strong, and management maintains confidence in its long-term strategy, supported by a strong innovation pipeline and disciplined marketing investments. Despite near-term hurdles, e.l.f. continues to outperform the category and expand its market leadership.